Okay, good evening, everyone. Welcome to the August 13th, 2024 Meetup group. I am your host, Roy Maddox, along with my partner, Wesley Maddox. We are both co-portfolio managers for a firm here in Charlotte that's called Integrated Financial Strategies. I've been hosting these meetup groups for probably 7 years now, and I've been a member of this group for 20 years or so. And I've been trained in William O'Neill's methodology, which we all know that follow the book How to Make Money in Stocks. It's called really the Can Slim process. And a lot of our work and my work over the years has been dedicated to identifying what's known as these true market leaders, and trying to get a few of these to really impact and change your financial life. And fortunately, I've been able to do that over the last 37 years. Tonight, we're going to get started a little bit different, because I want to get started with this NASDAQ chart just to bring you up to date with what Wesley and I have seen, in the last 10 days, because it's been an extremely volatile period of time. And we just want to walk you through what's going on, what's really the playbook, how should you manage your portfolio, how should you change your asset allocation mix, the amount of stocks that you own, and the levels that you should be invested in, and so forth. And we're going to rely on a lot of historical data to bring that to your attention, just to give you something that you can take back after this meetup and study, and put it in your file, so that you can refer and reflect back on how this market correction is similar or eerily different from other periods in the past. Wesley titled the presentation, "Is this a market? Is this the rally for real, or just a dead cat bounce?" Well, we don't know for sure, and we won't know for sure until after the fact. So we're going to share with you how to look at the data objectively in real time, and not based on having a money market quarterbacking scenario to unfold. We want to avoid that. But this is what we want to share. As you know, we've been in this power trend, and you can Google this. IBD, Mike Webster designed this indicator, this trend that I have found very useful over the years. And here I've annotated the trend, and you can Google that to find out, well, what constitutes a power trend, and how do they start? How do they begin? How do they end? And so forth. So I'll ask you to just Google that for all the specific information, for the sake of time and so forth. Okay, so this market's been in an uptrend. It's been led, as you know, by the mega cap stocks. And if you go back over really from our last meeting, we talked about the potential to have a move out of mega cap stocks to the Magnificent Seven stocks, back to something else. And we did see a rotation, and that rotation, in our view, commenced when the Fed had when Powell had his last meeting, and he indicated that, of course, we're going to lower interest rates. And that started this follow through day. So this market was really, there was a little bit of distribution at the top. And by distribution, we mean days where the market is moving lower on higher volume than the day before. So we had, right there at the top, we had some distribution, and we had very few accumulation days. And by accumulation day, a day where the market's up on higher volume than the day before. And so when you have these clusters of distribution, that normally signals that something's going to happen, either a rotation, a correction, sideways action and so forth. Well, we had this, from the top, you can see the key reversal day up there at the top, right there. And then we had a little bit of a break right there a few days later. And then this market, this market was really began to be in a correction. And by a correction, the 10-day closed below the 21-day. You could see that right here. The 10-day closed below the 21-day. And then we broke the 50-day right here. And so normally when you do something like that, when you have a break of the 50-day like that, that low is significant. Well, we got to rally back up, and then we had this big follow-through day. And the follow-through day, we definitely saw the rotation. And, I'll pull up the IWM, and you can see where money came out of big caps to the small cap stocks. And what we did is we bought on this first follow-through day, we bought heavily in the IWM, the small caps, the banks, the interest sensitive type vehicles that typically would do best when interest rates are dropping. And they do best because these mega cap stocks have much better balance sheets. They don't have really a lot of debt loads in many cases. And the small cap stocks are the ones that will benefit the most by providing liquidity on their balance sheet immediately when interest rates drop. And we saw that rotation. Now, this market, and we went from basically a 25% invested position to 85% in a day. And we actually sold the next day when we broke the low of the follow-through day. Now, just to give you a sense from a historical perspective, there have been 236 follow-through days since 1973. 56% of these undercut the follow-through day and closed below the follow-through day. And that's not a sell signal in itself, but it's telling you that the rally more than likely it's going to fail. Now, it was such a reversal, such a big reversal after the one-day follow-through day, is we immediately sold and took our loss on all these positions that we bought the day before, and not knowing what was going to happen over the subsequent days. Wednesday was the follow-through day. Thursday was a reversal where we sold everything that we bought. And then you had Friday where you had a big, big break. And that came when we had more negative news on the economy. What the market has been focusing on, as you're all aware, is the market's been focusing on a soft landing. And in a soft landing where the economy continues to grow, a cut in interest rates is very, very bullish. And Wes will cover some of these scenarios in our presentation. This was really a huge expectation breaker. And that's why we ended up selling, and taking our loss. We had probably about a 4% drop, in the day in our portfolios right there. But it would have been substantially more if we didn't take our losses quickly, the way that you're supposed to. So we had bad economic news. We had a jobs number that was very, very negative, and the market shift from lower interest rates to a recession, like from a soft landing to a recession. So bad news was good news until bad news became bad news. And then over the weekend, we had what has been known as the Japanese yen carry trade, where investors had bought they had bought Japanese yen, and because the interest rates were so low, and then they had invested, say, in the U.S. dollar, and then Japan raised their interest rates, And that made this trade, and there were billions and billions of dollars on this trade that were people were having free carry, and they had to cover and they had to take massive losses. And you also had NVIDIA over the weekend announce that their next generation chip was going to be delayed anywhere from 3 to 5 months. So, and we also had more saber rattling in the Middle East as well. So that compounded things. So we actually had, one of the largest 3-day drops in many, many, many years. This three-way drops all the way down to the 200-day moving average, and followed by this wedging market to the uptrend, this upturn wedging market. So the market did put in a follow-through day today, but this market has been wedging higher. And I'm going to show you, for example, like our buy list, for example, and I'll just go ahead and show this to you. This is our focus list. This is what we're looking. This is where we think you should spend the majority of your time, right here. And let me put this in alphabetical order for you so that you can do a screenshot. And so this is Wes and this is our best work in terms of, well, what should you be buying, like right here. This is our buy list. And this is what we're looking at adding, adding from this list. But these companies right here. So it's very, very up to date, and it's very fresh and so forth. So you can, we've gone through, countless screens, dozens and dozens of screens to try to locate the very best merchandise. But what I want to point out to you today is, when we have had this follow-through day, we have had this rally, but it's been quite unimpressive when we look at, well, what's rallied, and when we look at the volume. When you take a look at the volume, this is the buy list, and you can see a number of these stocks are up, but look at the volume. The volume's 65% less than average, and that's 50-day volume. 60, 50, all the way down the screen, you have volume that's less. And so that's not, that's less. You want higher volume to accentuate the positive moves up. That's known as accumulation. You don't want the market to rally on low volume. In fact, the market rallied on low volume just about all day until the end of the day, and people had to cover and so forth. Volume was only up 10% in the NASDAQ, which isn't, that's not spectacular. With volumes up 10%, yes, the indexes move significantly, but when we look at under the hood, it's been a lot of these companies that have just gotten crushed, where you've had, we call them reflex rallies, or a dead cat bounce and so forth. So this market, because of the damage that has taken place, it's going to take quite a bit of time for this market to heal itself. And so that's why I think it's important to take a look, to be very, be very systematic, very careful in terms of, how do you want to take advantage of the market rally. So this is today, this is a decent first step. A first step was the idea that the market held here at the 200-day moving average, but you're still in this downtrend where the moving averages are still moving lower, but we do see some lack of selling in terms of when we look at momentum gauges like the MACD and price phase and other things. So that's very positive. So this is the first right step, was the market didn't crash. And, we had climactic crashing type of activity, and the market did hold. But we want to be careful that you don't get in here, too heavily and too early. As this market rallies right here, we've rallied right up to the 21-day, and we have a very important consumer price index tomorrow. So we had a PPI number. That's what got this market going. That's what got this market going today. It was a very tame PPI number that was promising. But, that's been showing up on our data and on our work anyway. And we do know that the Fed is going to lower interest rates because we had some significant economic weakness in terms of some of the reports that came out. The odds are now a better than 50-50 chance that we have a 50 basis point drop in in September when the Fed meets. And I actually didn't look at what the statistics were. It's probably like a 70 or 80% chance now that we have a 50% basis point drop because there's a wide difference. There's just a wide difference between where the Fed funds interest rates are and where inflation is. So they're going to have to address that sooner than later and quicker than later as well. So we had a follow-through day, but notice what happened after the follow-through day. Last time we immediately sold off, and in this distribution dominant tape. So we have to be, you have to be careful here. So of all the stocks that we looked at as we looked through our buy list, they're stocks that are just rallying. They've rallied up the last 3 or 4 days, but there's not tremendous buying and there's not accumulation. It's a lack of selling where people actually, have, institutions say, well, I'm just not selling here, right here. And that's what's created this vacuum up, if you will. So this will fix itself, assume, either by reversing or improve by the breadth and the position that we're in improving in subsequent days. So we have to be cognizant of that. So take a look at this, and I actually went back, and we have many periods of time that we've looked at where we've had markets in uptrends and downtrends and so forth. But I want to point something out to you. Let me just take a look. Let me bring you back to 1998, and I remember this very clearly because I was in here and I was loaded for bear. And we had what was known as the Russian crisis with the Russian ruble and some other things. I think this was, we had a big hedge fund that blew up and so forth. And we had this watershed event down. And so the market was in an uptrend. The market was making new highs. And then you see the trend change where the 10 days below the 21 day in this downtrend. We had the watershed event, and I was in companies. I was in America Online, Yahoo, a lot of internet stocks that had triple-digit revenues and earnings. They were building out the internet then, changing everything. And during this debacle, this last 3 or 4 days, and that's why you don't wait. You don't buy the breaks. You wait. It's important to wait until the trend changes and you see that the low is in. In this particular case, you had the watershed event, and notice where you move. You had this move, and all the way back up to the 50-day. And a move to the 50-day, and actually this last day, this was a follow-through day. So we had a follow-through day right here. You had a follow-through day right there. And you had a follow-through day right there at the, this is the 200-day and the 50-day. That's the 200-day right there. And so you ran out of steam right there, and then you turned over. But notice where you had this sell signal. And the sell signal is when you take out the low, you close below the low of the follow-through day. So here's the follow-through day. Here's the signal to tell you that more than likely it's going to fail. This is an early warning signal, and then we cascaded down. You actually undercut the prior low to wash everybody out, and then after that, we embarked on a major move for the next 2 years. So how this resolves itself is we will see. We're not armchair quarterbacking right now of like, why didn't you buy when there was, quote, blood on the streets? Because there was blood on the streets. I can show you many examples where, buying a day or two early could wipe you out. And certainly it pays to wait and be careful. There's an old adage, it's not the lowest price, it's the right price that's important. But so I'm taking you back a little bit, taking a look, so that you can take a look at history and so forth. So right now, you don't want to see a low. You don't want to see us close below this follow-through day. We have a big report coming, but with the stocks that have risen, it's been mostly on low volume, and we have a pretty nice list of about 40 to 50 names, but they're not perfectly set up coming out of bases. They're just they're extended, and so it's going to be a little bit tricky in terms of being patient and and waiting until you are sure. We feel like we thought we were exactly right on the rotation, and we immediately got hit. So if you're not convinced or convicted here, you just and we're not 100% all in, because this follow through day failed, and we'll see if this one works or not. But what would be an improvement in today's chart? What would you like to see? You'd like to see us close above the 21 day, the low be above the 21 day, and we closed above the 21 day, but you want the low of the day to be above the 21 day. That'd be the first step. The first step is if you take a look at some of the short-term indicators like the MACD, things like that, we are turning there. That's really a first step. But what we really need to see is like a little shakeout. Like, for example, if we get this period of time, like right here, guys, where there's the low, you moved up to, in this case, that's the 50 day. And then you had a little shake right here. You see this little shake? And so it was a pretty nasty shake too. The market NASDAQ was off like 300 points, and then it held and then reversed up. So that's what you would like to see. What I would like to see is I would like to see us just go sideways here, a few more days, and then this turns into a pivot where you could add exposure above, some type of resistance or some type of pivot. But you don't want to see us close below the low of the follow-through day. And with the CPI, we expect a really good CPI number coming tomorrow, but it doesn't mean that the market will react the same way as it did with the PPI. The PPI number was great. We expect to have a great CPI number based on what Wesley has uncovered, but it's how the market reacts. And again, Friday's going to be important too, because of a Friday close. That's going to be important. So that just that's kind of an overview of sort of what happened, what's going on, how should you play it. It would make sense. And we have core accounts and trading accounts. We haven't added really any exposure to our trading account yet. We almost did, but coming into this number, we didn't want to, we definitely didn't want to get in front of a bad number. We were hoping that the market would sell off, and then you'd have an undercut and reversal, or some type of down with a major reversal, which would tell you that's the signal to get in. And here we didn't have any kind of pullback. and a move to, the market just went straight up today. So we definitely have resistance up here at the 50-day. We are aware that September and October are the worst performing months in history. So we have that to look forward to. We don't really think that the elections can be that meaningful because we know what Trump's policies are going to be. We know what Kamala Harris's policies are going to be. So we think that's in the market and so forth. So, just what's important is will the market, can it regain its footing? Will there be some accumulation? And will you see a lot of setups and breakouts? Frankly, depending on who you talk to, we're friends and we're friends, colleagues of Mark Minervanti, and he has one position and he's got one position on, and and that's it. So, we're very cognizant of that. We know what good setups look like, and we know what bad setups look like, and so we're waiting for that. We're waiting for our pitch, basically. But I wanted to show you one more thing, and then I'll turn it over to Wes, and that's the IWM. And this is this is what got our attention, and this is how we were totally fooled. So this Russell 2000 has really been lagging for quite some time. But when the Russell 2000 goes, it goes. When we take a look at the long term, look at these long term moves. And back in 2020, the Russell 2000, it went from you got a double there. You got a double in from the low there from 100 to 230 within a year. So you're up 100% in a year, and we within a year. And you can see at these periods of time in the past, when you get this, you get these moves, they last typically more than 1 year. And you can see these, these are multiple time frames in terms of years that we're looking at, multiple time frames. And we saw this breakout. We saw the breakout right here, right there. And we thought that, okay, game on here. And now we're going to start a new uptrend. You had this big, massive move on tremendous volume. And that's what you want to see at the beginning of the move, not the end of the move. This in no way would signify that this is the end of a move. And this is the beginning of a major move that we thought was going to last at least a year from this breakout right here. So you had this big move up, the market consolidated, and this is where when we acted right there. So it was really the only way that we could have operated better, because that was the information that we're looking at. This was a signal to move in. We saw the rotation out of the mega cap stocks. Well, where's the money going? It's going right here, and it was going right here, and it was it was based on Powell's last meeting, and the way that it was perceived by what Powell said, and the idea that okay, we're going to definitely cut rates. It's going to benefit small caps, and then it immediately reversed. And if we didn't sell immediately on that first day, there would have been significant pain. So that's what's happening in the small cap market. That's you kind of see what's happening with the NASDAQ. So we're just going to help you guys navigate through through this correction till we get into a new sizable uptrend, and then we'll obviously make money on the long side. So with that, let me go ahead and turn it over to Wes. And Wes, take you through, let me see, I have taken 30 minutes, so we'll kind of go through this fairly quickly. Yeah. And then, of course, we'll be able to send this to you so you can check this, review, observe, and learn from our slide deck and so forth. So with that, Wes, let me turn it over to you, and let's try to get through this in 30 minutes, and then we'll talk about individual stocks on the second half. So with that, Wes, it's all yours.
Hey,
All
Roy
right,
and Wes.
sounds good.
Okay. Hey, Roy and Wes, is it okay for me to ask question now about one of the things that you presented, Roy, or should I wait till that?
Absolutely, it is absolutely a good time. Go ahead.
Yeah. So can you bring up your chart that you were showing where you had a markup on power trend starts and ends? I just have one quick question for you, please.
Sure. Yep.
Here, I unshared.
I've got to.
Yeah, you gotta
I've got to reshare it, don't I? Okay. And let me see. Are you seeing it on the screen? Let me see. This is screen 1.
IWM is up, yeah.
Okay. Let me pull the NASDAQ up. And here we go. Go ahead. Okay, go ahead. Yeah, what was your question?
Oh, I'm sorry, I'm on the mute. Sorry about that. If you look,
Sure.
I have a question. On last May, you have marking says power trend began. Sometimes I think in the beginning of second week, maybe third week of May.
Yes.
Yep.
Yeah.
Then you also have some other places power trend begin. How do
Yeah.
you? What criteria did you use to determine it's a power trend begin in the May timeframe? The other one I can understand that at least there's a good deal of volume. I don't know what the criteria in last May led you invest to believe that's a power trend begin. Thank you.
Sure. I'll show you, and just to give you a
Sure.
heads up.
I'll drop a link, by the way.
What's that?
I'll drop a link where, just by the way, we're from Investors Business Daily, where they.
Okay, yeah, drop that, because that's really that'll give you the criteria. So Wes is going to drop the link. Take a look. It has to do with being above the being above the low being above the 21 day for consecutive days. The 10 day above the 21 day, the 21 day above the 50 day, the low being above the 21 day for 10 consecutive days. And you have to, and the 50 day has to have a green day. You have to be in an uptrend. So that's the criteria. Wes dropped it. So just take a look at that. And then you can, on the diagram, this is exactly where the beginning, where the power trend begins. When the power trend ends, it either ends when you're down 10% from the high, or the 21 day is going through the 50 day. Those are the two. You've got a circuit breaker where it ends, and the other is a drop 10% from the highs would constitute a sell on the power trend. Now it's important, and you can go back if you Google IBD, you can there's Webster's got a database where he'll show you a number of these power trends, and I have them annotated during various cycles and so forth. So with that, let me just move back to Wes, and he dropped the link, and just take a look at that when you get a chance yourself.
Yeah, thank you so much. I'll read up on it. Thank you for explaining.
You're welcome. So Wes, let me get back to you. Stop share, and now it's all yours, Wes.
All righty. All right. Yeah, I'll try to go, a little quick through this, but anyways, good, helpful to just kind of go real time, real quick, what we're thinking, because obviously it's only been hardly over a week since Black Monday was trending on Twitter, so it's crazy to be in this environment. It's always tough, and there's a lot of emotions going both directions. So anyways, welcome to this meeting. It's our Charlotte Investors Business Daily Meetup, and We've got just about 2,500 people and maybe 150 or so that'll join us tonight. But yeah, it's all of this. It's a group based on William O'Neill's How to Make Money in Stocks, and we just like to talk the market and talk stocks with anyone that will listen, and um, also just discuss with other people that have a lot of experience in this group. And of course, we're not giving investment advice here, but and I'll leave some of this for you guys. I'm going to send out the presentation as always, so you can go through this. And so, if it's your first time, you can go back and look through and some of these things that we talk about. But we always kind of just give an intro. We talk about our process, being this three-pillared stool: technical analysis, fundamental, and then macro. And I mean, really technical being clearly number one thing, just being first in this list. Uh, and
Wes,
technical analysis.
Wes, let me interrupt you one moment, but I want to make this point based on the power trend before I forget. Okay, so the reason that Charles Harrison, Justin Nielsen, and Mike Webster designed the power trend, it's to tell you when to put the pedal to the metal. That is when, based on their rules that they came up with in a product called Market School, that's the time to be on margin. So when a power trend, when it begins, that's just telling you that you can increase exposure and be on margin. That's the time to be on margin. Put the pedal to the metal. And when the power trend ends, it's not necessarily the time to get out of the market. It's the time to get off margin. So I wanted you to be aware of that as well. The power trend ending in itself is not an indicated. It's not a signal to be out of the market. Nor is when the power trend begins, is that the time to quote get in the market the first time. Based on our rules, a follow through day typically tells you that that's the time to start dipping your toe, dip your toe in or get back in the market. And the amount that you do that, the percentage, the size that you do that, that's really all reflection of based on if you have any profits built up, in your account, can you leverage those profits or not. So Wes, sorry for the
Yeah. Okay.
hopping in.
No, sounds good.
Go ahead.
So just back to this again, here's a list of what we look at in technical analysis, the trend being the most important part, but it can include all these various things. And then fundamentals, of course, understanding the companies, the growth prospects and such. And just kind of simplifying it to this CAN-SLIM acronym that was coined by William O'Neill maybe 50 years ago or so. And so, this is a good kind of checklist to see when you're looking at a stock if it meets this criteria in the CAN-SLIM acronym. And then macro, so we do get some macro data from Hedgeye. They just provide us with at least an overview and this kind of robust model of where we are in the economic, what economic regime we're kind of in, just based on two factors. So it's a kind of a relatively simple but robust model of inflation and growth. And the whole point of that really is to understand, what the Fed's going to do, because the Fed is a big driving factor throughout these economic cycles. And also, just for your reference, at some point, here's a list of some classes and styles and things that might maybe work depending on where we are in that economic landscape. Okay, so I'll get into kind of the current events type part of this presentation. There was this big yen carry trade unwind, so people have been talking about that a whole lot because this huge strength in the yen from an interest rate hike, a quarter basis point, I think, or a quarter 25 basis point interest rate hike by the BOJ. and it kind of started this whole unwind of borrowing yen. So, one of the interesting things here, and I've talked about this crowded trade, this futures positioning data in the past a little bit, and what we have here is this blue positioning being the speculators in the market hitting a very, very high net short position just before this, massive unwind happened. So, interesting to see that the commercial positioning was, max long into this, kind of knowing, or not, maybe not knowing, I'm not sure, but it told you that there was risk of this. So just over the course of 4 weeks, we saw that, I'd say, completely unwind, where you've got that neutral positioning, where the, speculators are almost, almost completely neutral. These blue speculators have almost completely unwound their short position in that yen. And then, along with that, we had that, really anxiety-ridden weekend. There was a Sunday where, at least everyone was reading about the Nikkei dropping, right? Because I guess they opened before us and they were down 13 or something percent. And it was the worst 2-day drop since 1987. So, it was a huge, huge deal. And that kind of volatility across the globe has ripples. And so, we felt it here for sure. Maybe not not to the same extent, clearly, but that was certainly in the headlines, and you never know. That's why it's hard. It's just a lot of times you just de-risk and you kind of wait for things to shake out. I think the Nikkei is up a little bit more even, so it's filling in a lot of what they lost, but still, an alarming drop. And one of those things, and we had to kind of have some central bankers get on the TV, have some statements to kind of calm things down, to let the public know that there is going to be support if global stability is at risk. So, we had I think Chicago Fed governor go on TV Monday morning, I'm sure in response to this, and kind of say, look, we are restrictive still, but we're gonna make sure that we maintain stability. So that's possible that we got the low end with big panic like that, and we'll talk about a couple things that spiked and why. That could mean that the low is in. But let's see. Okay, just real quick, I'm just going to update this for the next couple months because it's easy to grab from this website. But this is the odds now of a president victory, right? So fascinating how things change so quickly. Obviously, Trump was getting a little bit more support, almost just losing or gaining, these Biden supporters that were falling off just because he was clearly not going to be the guy. And then it peaked right here. Trump support actually in odds, I guess, odds peaked when he got shot at on this day, I think at about 68%. And so he's been trailing off since then, just over the last month. People have short memories, so the media cycle and everything is, it's funny how that it just changes so rapidly. So, he's currently declining. Harris gaining in these polls and in these betting averages. Okay, we got the PPI today. We know CPI is tomorrow. The PPI was a light number, right? It was up just a little marginally. The PPI, I've been talking about how it leads the CPI down. We've been talking about this for almost 2 years now as it kind of crossed through the CPI number here. You've got PPI in orange, CPI in black. So we'll get this report tomorrow on CPI. It's probably going to be about 3%. It could be 2.9. That would be a little bit lower, I think, than expected. But anyways, this PPI as it hovers below CPI, I'd expect it to keep kind of pulling it down in some regard because it is a leading indicator because costs and the PPI will then flow through to consumers. So it's a welcome thing to have this, right? More confirmation that inflation is not a problem. But here's a look at CPI and PCE. So again, CPI is coming in tomorrow for July. We've got a 3% estimate there. That's from the Fed nowcast model. They have 2.7% in August. So, it'll be very nice to see a 2 in August. The thing about August is then you start to get a little bit of like a more difficult comp where compared to the prior year, but you should still be able to maintain that 2% or the 2.7% or so CPI rate for the next couple of months at least. And so that, the market could respond positively to that. But, to me, this has not been the story. I think it's been pretty clear that this has been taken care of, really. Inflation is not the dominant factor in the Fed's decision making and not in the market's reactions anymore. It's not exactly all about that. We'll talk about what it likely is, but what I wanted to also show about the CPI, and this is from the Fed nowcast. That's where I always get my estimates from, because who knows better than the Fed? I thought this was an interesting thing. They have this quarterly number down here, quarterly annualized percent change. So, they give us July and August up here, but for the whole quarter, and just looking at it's the same way that we measure GDP growth, that quarter over quarter seasonally adjusted annualized rate. Based on their estimates, we're going to be at or below 2% in the third quarter. I think that's extremely important. I think that if that goes any lower, the Fed needs to be very concerned about inflation overshooting to the downside, because their tools take a very long time to actually have an impact. And they've said that in the past. If they wait till it gets to 2%, then it's going to be they're going to have gone too far. If this comes unchanged, if this is a quarterly number, if this is unchanged, this estimate following tomorrow's report, I would say it's an absolute must that the Fed's going to cut and everything. And there is, CPI is now the clear number two. The clear number two policy imperative, I guess, for the Fed. And then just again here, we've talked about, there's still some inflation bears out there. I think there are, but to me, I see wage growth coming in. We saw the weak employment report from just a couple of weeks ago, and wage growth is slowing. It's coming back to that normalized rate, which would be in that 2 to 3% range. 3% is totally normal in a tight labor environment. So that's what we had at the end of 2019, a very, very tight labor market and pretty healthy wage growth. So I think this is not a big driver of inflation worries going forward. I think that the thing that we're going to see, like we saw Friday, it hasn't been long since our bad jobs report, where bad was bad. The real question is, okay, is the Fed going to pivot? Is it going to pivot hard enough, and is it going to do it quick enough over the coming months? Are they going to overdo it? They were slow to act with inflation, right? They were very slow to act with inflation, and that got away from them. I don't know if there's going to be I think there's a similar confidence level, I think, in the Fed to act quick enough in this regard. So I think that, that's got potential to continue to kind of creep in if we get more bad data points from the labor market or from growth or manufacturing. So, certainly want to keep an eye on that. If things start to deteriorate, there could be a little bit of another worry in the market. But for now, I don't want to, again, I look at this nowcast stuff from the Fed as my sort of best estimate for what I think we're currently in the current quarter. And that can kind of guide you through, if it's a decent environment to invest in. And for now, the GDP nowcast is at 2.9%. That's really similar from last quarter. So nothing in this model is telling you that growth is about to collapse and we're going into a recession. Sure, you could slow moderately. I'm not sure. That's possible, of course, always. But for now, a lot of this, real-time data and growth is not saying, okay, we're going into a recession right now. The one thing that I think sparks some fears, though, in growth is this SOM rule. You can look back at on your own about how this is kind of calculated, but it's just talking about how when unemployment ticks up a certain amount, it is hard to stop the cycle of greater layoffs and weaker labor force. So you can see a lot of times that when this SOM rule line, this red line is crossed in unemployment, it often is kind of at the start of a recessionary period. Over the past 70, whatever this 80 years. So, that's the worry, right? That's the worry that they can lose control of this labor market, and you sort of have this spiraling effect of, okay, layoffs beget lower growth, which begets more layoffs, right? Which begets lower growth. So anyway, I expected this to be more in the narrative, honestly, last Friday when the SOM rule actually did get crossed. This line did get crossed from the uptick in unemployment. So keep an eye on that. That's something that could derail us, right? And we're getting all this economic data every week, but I think a very, very key report, even more so than CPI tomorrow, because I think everyone expects a light CPI now, following a light PPI just the day before, and this massive rally would tell you, I'm sure people are pricing in, a healthy CPI today, but we got to keep an eye on this, because if this were to uptick again and again, maybe another 2 percentage points or 0.2 percentage points at the start of September, we'll see, but that would certainly get people, that would certainly jostle markets a little bit more, because we don't want this to keep climbing. And the history shows that when it starts climbing, it's hard to stop it from climbing. So anyways, that's the main, I think, worrisome backdrop. But other than that, we're going to continue to watch the trend and everything. And so Roy kind of went over some of this stuff. We went over like the follow through day. I just annotated a little bit just to say, okay, that's where the Fed had the press conference. It looked like we were off to the races, there, and then we got this nasty reversal. As the market, I guess, was right? Everyone digests it for a day. There's an initial reaction, and then the next day you see how people actually interpret it. A lot of what they said. But then we had Friday here. Unemployment rate ticks up. Bad news is bad news, right? That's what we're looking for, that change in character that's different than what we had seen for maybe the last 8 months. Bad news was good news because rates were coming down, and then we got this perfect storm of bad news is bad news. Rates were down and stocks were down. Just last Friday, right? So it's only been 7 trading days since then, where everything looked ugly. But with that, right, with all this data coming in, still the Fed, everyone's talking about, where the Fed's going to move rates. Today, we're sitting here at this black line. I know there's a few lines on here. It's a little confusing, but 3 months ago, we had a lot of rates priced in here in this blue line. Since then, it jumped up. It jumped up to this green line just a month ago. And then since then, we've been drifting lower with more recent data coming in. So, this is just the market continues to look for, guess how much are they gonna cut? I think it's clear that they're going to need to cut in September, and this is just volatile, and the Fed will act as needed. But what we look at is the 1 and 2 year Treasury yields. These are basically the barometer of the rate path. Right, as the 1 year comes down, it's obviously including rate cuts in there. So the 1 year basically telling us, okay, they're gonna lower from here to about, I don't know, 4% over the next year, and the same with the 2 year. Saying it's going to be actually lower than, they're going from here to 3.5% over the next 2 years or something with that math. So just still keeping an eye on these. The market's trying to lead the Fed and kind of they're gonna act first, just like on the way up, right? If you remember, okay, rates were rising in 2022 while the Fed funds rate was probably at 0.5%. The 1 year was at 2%. So it's the same way up and down where the market's going to lead the Fed. And it kind of gives you an important backdrop. You don't always have to take what the Fed says at face value. It's better to look at the market, which is reacting real time. The Fed only acts once every 6 weeks, and the market, acts every day. So, and also there's a history of the Fed saying, one thing and then ultimately being wrong and having to do things that the market was predicting. Okay, here's a look at the 10-year, falling hard, negative employment, good CPI reports. I know there was a negative ISM report in here, which, sent rates a lot lower. So, in my view, I think we're on our way. I mean, still lower from here, over the next couple of years. One thing that we want to talk about, on a positive note for sure, with what was this breath thrust? We talked about it a month ago, or we touched on it. We didn't have the data. I didn't have that put together, and I got this from. I just want to give credit to this guy, Grant Hawkridge, who shared this table on Twitter, which is great. And so I didn't have to put it. I didn't put it together, But what you have here is this: the number of 5-day advancing stocks exceeds the 5-day declining stocks by 3 to 1. So it's a big participation thrust in stocks over a 5-day period. It's really similar to some other things we've looked at in the past, but anyways, it happened to trigger July 16th, so just a month ago. And you can see over 12 months, let's say this is about a year, right? 252 trading days. So over that time period, with all these observations, it's higher 100% of the time, and the average return is about 23%. You can see, however, I don't have it included here, but the 5 days following July 16th, we were actually down 2%. The 10 days, we were down 4%. And the 21 days, we're not quite done, but we're down about 6% from that signal. Clearly not a hot start. And if we're at 6%, that would be the second worst 1 month start from that breath thrust. So if you believe this number 12 months from now, then you should be, excited and well positioned to know, okay, if we just started out historically one of the worst, follow-ons from that thrust signal, well, you've got 6% plus 24% forward. So you got about 30% upside potential if you're a believer in the sort of average return over the next 11 months.
Wes, let me ask you: is the 6%, is that down from the high, from when it triggered to the low a couple of days ago, or is that through today's close?
It's through today's close, or actually, it was through today's close. Actually, that was yesterday's close. That's through yesterday's close. So, and it's the S&P. So that was up 1.4. So we're down 4.5% or so from the day it triggered, which was not the all-time high. The 16th was right. It was right here. So it was close to the all-time high. The 16th being right here to here. So in the S, that's about 4.5% from here to there.
Okay, thanks.
Yep. Yeah. So that's something to consider. I don't necessarily think it's right to be. I don't think it's necessarily right to be bearish. I mean, we're in this kind of no man's land where we've rallied now off those climactic lows potentially, and now we have to wait and see. But the Fed is absolutely in good position. That's the thing. They are in a very good position to actually be accommodative going forward, coming from a historically very, very restrictive policy stance. So, it's hard because everyone's waiting for this to happen, right? We're all waiting for this broad market rally. which I believe should be the outcome ultimately through all this. But we're all trying to discount it. But until the Fed does something, we'll see. We might just have to wait. Still continue to kind of wait for that real broad, easy dollar market. So here we are though with the Nasdaq and the MACD. I'm calling it no man's land a little bit right now. We hit the 200-day. If you bought the panic, great, you're in good position. But you've got to wonder, I don't know at this point if you're a trader, you're considering taking some off, I would assume. In the meantime, we're about to get this MACD momentum crossover buy signal. So, that'll be a step in the right direction. Here, where, we could have this momentum, this MACD improvement, maybe a little bit of a consolidation, and then another move higher and through the 50-day in this NASDAQ, and then resume our uptrend, right? So that's kind of what we could see. It would be, impressive, obviously, just to shoot right in, into the 50-day tomorrow. But we had this heavy break below the 50 here. A fake breakout here with the IWM, which is never a good sign. And we've got this rally just to that low. So yeah, it's hard to say what to do here at all. There's really not a whole lot of there's not a great game plan. We'll go through a couple of stocks that look good, right? So the strongest stocks are already above their 50-day. And we'll talk about a few of those that are setting up, but for now, the 10 days below the 21-day, this green line below the magenta line, we're below the 50. I don't know. I think that there's a good chance we just have a little bit more time below the 50 till we resolve this trend. I wanted to throw up this long. Oh, it's actually the Nasdaq and 30-week moving average, so this should say 30-week. But I wanted to pull this out. We're still in this long-term Nasdaq uptrend based on this weekly chart. We were wondering, okay, if we were going to have one close. If we get two closes below, that's when we start considering, okay, are we entering a long-term downtrend? But actually, that ended up holding, which is impressive. And so, the long-term Nasdaq uptrend kind of remaining intact on this weekly basis. Okay, and then we'll go through some of these breadth things. This is the stocks above their 20-day moving average for the S&P. Had a little washout here, not at those April lows, but big pullback in breadth. Same thing here with the 50-day, a little pullback in breadth, not necessarily a huge damaging pullback in that number. And here's the stocks above their 200-day, and just a similar thing for the S&P 500. The NASDAQ, nastier pullback, so that's something that's quite telling. A lot of these tech stocks got hammered. A lot of these chip stocks got crushed, and so that actually is an extremely washed out short-term reading on the NASDAQ and the stocks above their 20-day moving average. The 50-day, we hit that sort of April level, so it's kind of a normal pullback. Sure, it still is normal based on averages and everything, but nasty nonetheless when you're in the middle of it. And then here's a look at the stocks above their 200-day. So briefly, we had 50% of stocks above their 200-day. So 50% of stocks in a long-term uptrend. Finally, after many years, we have not had a sustained period of stocks in the NASDAQ above their 200-day. Just briefly crested that level over the last few years. Okay, and this is kind of giving you a better feel for the environment too. Net new highs are still negative, so more stocks making new lows here than highs, despite the indexes rallying. Nvidia obviously being a huge part of this rally in the last in the last few days. I think it's up 20% probably from the lows. And here's the New York Stock Exchange index, and this is what got us and I think so many others bullish is this sort of broader based basket of stocks breaking out to new highs after maybe a 2-year consolidation and then the failed breakout happening just a few weeks later. But we'll see. We'll see if this can rebuild itself. It has righted itself to some extent. It's above those averages, which is great. Very very welcome development. But a fake out right there, which is troubling to get caught in like that. We had highlighted how overbought we were last meeting just a month ago. We hit this really really high level in this McClellan oscillator, showing us how overbought we were. And then we hit we got basically neutral the last couple of days. So same thing with the NASDAQ McClellan oscillator, very very overbought. And then not quite neutral, but this bounce, so we're not oversold. We're not oversold anymore. So if we're gonna get a pullback, it could happen. It could happen. I mean, over the next few days, it could. Just because that oversold level has kind of worked itself off. So some more on sentiment here. This is the VIX. It spiked to 65 pre-market. This was on just that last Monday, where it hit 65. I think just I guess at the open. And there was, huge panic with a lot of stocks up, gapping down 15, 20%. Individual stocks got gapping 20%. The NASDAQ maybe down 6% pre-market, overnight, things like that. So it's the question you have to ask yourself about this is, okay, this is an historically high VIX spike, 65. Is that all you need to know? Is the question I've been asking myself. Is that it, right? Is that panic? And that's it. That's the third highest VIX since COVID and since the great financial crisis. Doesn't seem like it can get much worse than that. So that's what I'm certainly trying to figure out with a huge historic spike in the VIX. But then some more sentiment. We've got this active manager exposure. This survey is saying active managers are about 75% long. That's certainly not a washout. We saw that in the S&P 500 breadth too, right? We didn't get a huge washout in that either. So there's a little bit of conflicting things, but the VIX, might trump everything with that massive spike. So certainly this is what we're going to be looking at. I know Thursday this comes out for the latest week, and it will be interesting to see, how that changed, because at meaningful lows, we are used to seeing this come down a little bit more, but I'm not sure how many people sold the open on Monday. It was such a quick, fearful shock that we've gotten almost all of it back, if not more, since that nasty pullback. We did see a pickup in bears, a little pullback in bulls. So, now we're sort of at this neutral stance, I'd say, of bears and bulls. It is the highest amount of bears we've seen since the start of 2024. So that's nice. That should bode well. If we get an even higher pickup in that comes out tomorrow, that data point. And then, okay, another huge, I think, sentiment negativity spike. We saw the put call ratio hit this threshold. This is 1.15. Puts the call. So when that ratio is high, it's a lot of put buying and a lot of fear in the market. Got a couple more of those spikes noted here, and these did come with meaningful lows in the market. The other possibility, of course, is we just barely hit it right here, in 2022 and in 2020, or in I guess April and June of 2022. That's still a possibility, sure. But when that does get elevated, you see these snapback rallies, and that's what we've had. That's what we've had so far. And just here's the equity put call ratio. A spike, not as big of a spike as we've seen in the past. So not exactly huge fear in this particular put call ratio. This is something that sparked fears and needs to continue to be monitored. This is the high yield spread. So this is that measure of credit risk. This is telling you there was a lot of credit risk being, I guess, perceived in the market over just 2 weeks ago. So yeah, if this is breaking out and going to start trending upward, that's interesting. This is not, yeah, I don't know. That's a meaningful spike. That's a massive spike in high yield spreads in a short period of time. So, that's telling you something's changed. There's a little bit of risk out there in credit world. So we're going to keep, checking on these high yield spreads. And okay, last month I showed this chart too. It's just the all country world index excluding the US. Okay, the globe, the entire world is breaking out. The entire world is about to participate in this bull market. Breadth had improved. The Russell was breaking out, and all these other countries were also going to be part of this. It looked like so far, just like the Russell, fake breakout, just like the New York Stock Exchange Index, fake breakout. We've rallied back, and again, I don't know. I see it as sort of a no man's land. You've got the snapback rally. I'm okay waiting, watching it consolidate, above the averages, near new highs, and taking a stab versus, risking some capital now. Just with the risk of this being a dead cat bounce, we shall see. We'll see shortly. And it wouldn't be an effective dead cat bounce if you didn't have a little bit of self-doubt the whole time during the rally. But then I'll just look at a couple more. Here's Bitcoin. Just want to highlight Bitcoin. This is a fast mover. Historically, as it's consolidated below the 50, just within a day or two, this thing can snap higher quickly. And this is one of Roy's most bullish ideas. Bitcoin still, just given the new ETF and all this institutional potential backing going forward. So, we still like Bitcoin. Gold continues to perform pretty well. Broke out in March, still staying elevated. And we know it's just coming out of this consolidation, multi-year consolidation on the monthly chart. So nothing wrong here. Any pullback, could be bought. It would appear, that this is the start of a several year bull market potentially in gold. Oh, okay. And last thing I just wanted to end on, because I thought this was very interesting. I came across it like this week, because it registered for trading, of course, and thought, okay, this would be cool if you guys haven't heard this. This is Federer, of course, great tennis player. And he spoke at Dartmouth. So this is actually a link if you wanted to watch it at some point. This is a link to his speech there back in June. And if you read it, he won 80% of his matches. Okay. What percentage of points do you think he won? 54%, right? What a crazy margin. That's, it just shows you, success is that margin is so small, but if you can get it right, I guess when you need it and just keep doing the right thing over and over and over again, stay in the game, and just eke out that victory, get that edge on your trade, 54% of the time, you can continue to kind of make it through this. And I don't know how everyone on here handled everything with this nasty pullback because there was a lot of panic and a lot of damage done. And so, the only thing that matters is if you can stay in the game and learn from anything, any experience that might have happened over the last 10 days. As long as it's not wasted and you learn something from it, then it can all be used to your advantage over the next several decades. So, yeah, just thought that was an amazing stat that, he's all of a sudden he's one of the greatest ever. I don't know much about tennis, and to only win that percentage of your points is pretty amazing. Right.
Fantastic. Thank you. Thank you, Wes. Appreciate that. Okay. I'm going to take over now. We'll talk about, let me share my screen and we'll go to individual stocks because this is really, this really, this pays our bills here. So let me pull this up. Good job, Wes. Are you guys looking at are you looking at the NASDAQ right now, Market Surge? Am I sharing that screen with you guys or not yet?
We see it.
You don't see it?
We do see it.
Okay, good. Okay, so look, this is the NASDAQ, and I'm actually pulling up, want to take a look sort of to give you an idea of like, okay, what should be what's your playbook? What's your game plan? Like, and I'm speaking, to that, I'm really talking to myself because Wes and I have talked about this at great length over the last few days. But I think it's important to look at a couple of things. First of all, I think you want to buy stocks, your fishing hole should be stocks that have reported earnings that had a really good quarter or they reacted well to the quarter and earnings is out of the way. So, you don't want to contend with an earnings miss that might be right upon you at this particular time because the market is, it's a little bit unstable. It's unhealthy currently. And so if you walk into an earnings report and there's a disappointment, you're going to get torched. And so we prefer to avoid those types of situations. It's not like, unless you have something where you have profits that are built in and, you're willing to let something, drop, 20%. And, for a new position going into the number, we're really not comfortable with doing that. So we think that it's probably makes more sense buying stocks that reacted positive to the numbers, that have institutional ownership, and that are near 52-week highs. And let me show you a few of these, and I'm just going to pick these to give you an idea. And again, you can print this out if you if you made a screenshot, because I want to show you what you should be doing, what you should be looking at, and what you should avoid. You want to avoid all the stocks that were past winners that you're trying to get some type of bounce. Like, for example, you want to avoid stocks that look like this. Dell Computer that made a 52-week high, that didn't react good to the number, and then it's gone straight down. So you don't want to be buying Dell Computer here. You don't want to be buying ARM here has been clobbered. You don't want to be buying Micron Technology that's in a stage 4 downtrend. It's debatable whether or not you should, if you would want to try to buy something like an SMCI. These are all stocks that have corrected massively and that have, that are in downtrends, not in uptrends. So you want to be real careful in terms of where do you want to allocate dollars. Now, the type of patterns now that you want to look at are things, for example, like, and this is in alphabetical order, this ADMA, it's got our attention because it's a biotech stock that reported earnings Earnings were up 750%, and you've got 4 straight quarters where they've increased revenue growth and you've increased earnings. See, sequentially, quarter after quarter. And it just broke out to a 52-week high on volume. You had what we describe as a 10-300 day where the stock's up more than 10% in price and volume eclipse over 300%. That shows you tremendous institutional ownership. We were very close in terms of adding this today, but in light of the CPI number coming tomorrow, we just refrained from doing a lot of buying, particularly since we just got hosed on buying the other follow-through day that happened to fail. But this is the type of pattern that you should be looking for. Great numbers this year, great numbers next year. This AONY, this is another biotech stock that has great revenue growth, and they have a new product mix, and the stock moved up on this new product mix. It's a phase 3 drug. Went higher. You had this ants formation pullback, and now it's sitting up here near a 52-week high, and earnings are out of the way. You can see earnings were reported last quarter, earnings up 136%, revenues up over 100%. So that's why this stock is near all-time highs with the 97 relative strength. And that's the type of pattern that you should be looking for. Axon Enterprise, which is Taser, and this is the earnings report on Taser, and you can see the stock had a 10-300 day, moved to a 52-week high on the earnings report, and you can see the stocks had some positive earnings drift on the stock. And we're just looking for just a slight little pullback to the 5 or 10 day moving average, where then we would be interested in adding. But with the stock being extended like this, we would just, and I actually have a horizontal trend line, which is right here, where if we get a little shakeout in the market, and by the way, these are stocks that should potentially, they're on our buy list. They should be on your buy list, we think. If we have like a 1 to 2 day, pullback here, if the CPI news, it's not viewed favorably, or the market sells off, that's going to give you an opportunity to see what's really holding up then after a little shake and bake in the market. We didn't buy Kava because Kava is reporting in a few days, and we didn't want to go through that earnings, they report in nine days. So we didn't think that we would necessarily have a sufficient profit going into the earnings report, and that's why we didn't buy it. But it's acting totally good. And it broke about, you could have bought this 2 days ago in the midst of the volatility in the market when it broke back above the 50-day. But we didn't buy it, but it's got leadership. It's got leadership characteristics. Costco just broke above the 50-day, so it's now, we think it's repairing the damage. So this should, you should be considering this. Now, we do have retail sales numbers, and retail sales, like Home Depot reported today, they gave a dismal outlook for the consumer. And from our research is showing that the consumer is tapped. They're tapped out. They're taking on a lot of credit. They've got a lot of credit card debt, and they're just, they're tapped out. So you've got Walmart, I think, reporting Thursday, so that's going to be important with retail sales. But Costco is definitely the leader in the group. Big institutional company, blue chip company that's acting, great. You've got a few smaller companies, but see, this is what I'm pointing you guys to. See the reaction after earnings. It's actually like right here, the reaction, a big accumulation, a really excellent earnings report, and the stock acting great. See, we're not looking to play something on a reflex bounce. We're looking to play something that's $150 that can go to $300, that it can get into, that's in all-time high territory with no overhead, no overhead resistance. That's really what you should be looking at the, in this, in the market environment. Carvana, almost pulled the trigger on this one today, but we're giving it 1 day. But that's the, earnings came out. Earnings were up 125%. It broke out to new highs and then came in the market sell-off. And, you should be, of course, this is showing leadership as well. Earnings are going to be up 159% next year. And relative strength of 99. Let me show you a few more of these. CyberArk, you got CyberArk and also Fortinet that, we've all seen what happened with CrowdStrike. By the way, and I want to pull that out because I'll show you how important it is to avoid just the disasters. But I'll show you when we actually broke even, I think, on our CrowdStrike trade. But CrowdStrike, had the big hack and, shut down, computers all across the world for 12 to 24 hours. And CRWD. And we showed CrowdStrike breaking the 50 right there. And then it proceeded to just collapse further. This is not the type of setup that you want to spend any time with. Spend time with these stocks that are near or going to 52-week highs. This is old merchandise. You'll get trapped here, and this could take you years before it makes another 52-week high, because when you fail in the marketplace like they did, it takes a lot of time for your brand to be restored. We know what happened with Chipotle and the salmonella issue, years ago. It took them a couple of years to get through it. But CyberArk and also a Fortinet, FTNT, are potential beneficiaries of that. And again, we almost pulled the trigger on this, but again, we're not getting in front of that CPI news. But this is the type of action that you want. This was in a downtrend, reported earnings, gave excellent guidance, and the stock hasn't given anything up. So you can see where Wes and I, we have an alert right here, which is a signal to put the position on going through that level. You're right there. And the way a setup like this would work is you buy taking out that high of that first day, and you can press it at 73.64, to press your position going up, as it's trading in your in your direction. GE Verona, which is this was a spinoff from GE, the energy alternative area. They're in everything in terms of green energy, turbines, building the infrastructure, equipping the grid, and so forth. And they have really terrific numbers. You can take a look here. You can see they've got $30 billion in revenues. So not a small company, a recent IPO, and this has the characteristics to be a brand new leader as well, coming out of this market correction. 88 relative strength. You can see it breaks into new highs territory at $185. So it's got a terrific price, great numbers, and look at the numbers next year. Earnings next year are going to be up 69%. They're going to go from $3.50 this year to $6, up almost 100%, and that's next year. So this is what we're pointing out. This has the potential to be one of these stocks that goes from $180 to $350, you know, in the next 12 months. Harmonic light waves, that was an earnings. This, you know, this doesn't look quite as well because it came all the way back into the base, but you can see that there's the characteristic of moving up on the report, coming in the market. Now it's turning up, but it's a very thin stock. You can see that it only trades, you know, $20 million a day. So this isn't the type of thing that we can buy. We're putting, you know, multiple millions of dollars in one position. This would be, we couldn't buy 200,000 or 300,000 shares of this without moving it. Intuitive Surgical, Eli Lilly, we actually put this back on a little bit today in the core accounts, breaking this downtrend line back above the 50-day. They had an excellent earnings report, great numbers, and it's back in play. There's the sell-off there from 1,000 all the way to 750. And, you know, the back above the 50-day right here where we have this trend line drawn, that was your entry point. So this isn't really extended that much, you know, but it has rallied off the bottom. But again, it's not getting the lowest price there, but the best price, which is when it's back above the 50-day moving average. But they sold $3.5 billion worth of Mounjaro, $1.5 billion in Wegovy. No, Zepbound. Wegovy is Ozempic's product, their compound. But, you know, we got, you know, they just reported their second quarter since their weight loss drugs have been approved. And this is something that's going to continue to revolutionize weight loss and also the implications of those drugs in terms of reducing heart disease and others, or might provide other opportunities to sell the drug. So Lilly, definitely an institutional favorite. Made My Trip has, you know, India stock has great numbers. You can see it broke the downtrend line. Solid, you know, very solid numbers and 98 relative strength. So we're pointing out that this is where the leadership is. So forget about a lot of these stocks that have gotten crushed. The only one that's really got our attention is still NVIDIA. And I'll pull that up here in a moment. But Make My Trip, and Indians, love India, and the Indian markets, great. This stock is really got our attention, and numbers are really going to explode in the next couple of years. And you can see this stock is not giving up much, damage at all. There's a sell-off into the market collapse, and then it's come right back. So this definitely has our attention. Now NVIDIA, there's no way of knowing. So NVIDIA, you're getting your rally, and we could go to the 50-day, and Jensen hasn't spoken yet. Earnings are in 15 days. So I have no idea. I have no idea what to do. I have no idea what to do if I would own this stock, because they haven't given any guidance. Jensen could say, hey, it's no big deal. But, the story that came out, and the stories, IBD wrote a story, a lot of people have written stories where they're talking about a 3 to 5 month delay. And of course, that doesn't mean that the demand's not going to be there. The demand is going to be there, but there's going to be an impact, and we don't know. There's no way of knowing if it's discounted or not. The idea that it bounced right there from this level here, that might tell you that might right there tell you that there is support in the stock, that might be a momentum low in it. But again, if you remember that 1998 example, and these were stocks that I owned and made a fortune in, but they dropped 50% in the course of like 2 weeks on the move down, and they actually retested the lows. And so we don't know in the next 15 days if Nvidia is going to peak here, roll over, undercut that low until the news comes out with earnings where Wall Street they'll be better able to model what the stock's going to do in the future, and in terms of margins, in terms of revenue growth, and so forth. So you got this bounce here. If it gets about above the 50-day, and if this market continues to stair step, this is the Mac Daddy. This has been the leading stock in the market, for the last year and last year and a half. And if this stock gets back above the 50-day, that's going to put it in Bible territory. But then you're going to have to contend with the earnings. So you got 15 days. But if the report's good, it's going to break this downtrend line on the earnings, and people are going to be, that missed it, that didn't buy it back. We didn't buy any back down here because of the uncertainty. But then you're going to, that's the Monday morning quarterback that you have to avoid. If it makes sense to you over the 50, it's okay to take a position, but you can't going into the number, you can't take an oversized position, in my view. Yeah.
Can I share one observation about NVIDIA, if it's okay with you and team?
Go ahead, please.
So NVIDIA, unlike other stocks, when they split, especially when you have more than, what is it, like 8 or 10 stock, 10 for one, something like that, right? Split they had.
Yes.
Generally speaking, and especially high-tech company stocks, when they split, volume tend to swell up because stock is a lot more liquid. NVIDIA doesn't seem to show that characteristic. In fact, after split, volume began to gradually come down. That is strange to me.
In the past, it's been documented. One of the characteristics of stocks that are peaking, that peak, it's like when you have multiple splits. We've had a number of these stocks that have split, and but the idea that it's had a 10 for 1 split, or like AVGO, SMCI, that doesn't necessarily mean that the stock is peaking either. But when you have a series of those, back in like 2000, we had like Qualcomm, you had multiple splits. Now in Qualcomm's situation, and that was my biggest winner in 1999 to 2000, it split right at the top. And other times you have other anecdotal information. You're talking about volume here, and I appreciate that. But
just the observation,
Yeah, and that's very interesting that you would say that. The other thing is when stocks get moved, when they get put into the S&P 500, that normally there's a short-term peak when they because they move up on when they announce it, and then the stock has some type of exhaustion period where when everybody has to buy, you have a short-term peak in the stock, not a major top, but just a tradable peak there. So that's very interesting that what you said in terms of the volume. That's very interesting. Thanks. This is Oscar Holding. This is an insurance company. You can take a look at the earnings next year. Earnings are going to be up 900%. And this has really got a pretty nice setup. Earnings are out of the way, and which is something that you want. It's not in technology. but it's thin. See, it's this is trading, $50 million a day in terms of how much it's, how much of the market cap is it trading, and that's not great liquidity, only 50 million, but it is setting up here. The stock was at a 52-week high, corrected. You had the shakeout with the market came in, the move back above the 50-day, and now you can see it's really tight here. You can see where I have this pivot drawn right there at 1879. So earnings are out of the way, great revenue growth, great earnings growth when you look at it. So this would be a potential candidate too of just something quiet sitting here, and then it goes. Pulte, and you can take any home builder, and we're very close we were very close today in terms of adding, this back, adding Pulte. And again, we're giving it, we gave it one more day there, but this thing is setting up. And of course, as interest rates come down, along with the mortgage companies, there should be, these companies should benefit. There should be more activity, and really they're all trading about the same. You can pull up DHI, you can pull up Pulte, you can pull up Toll Brothers, you can pull up DH Horton. They all are very similar, where they made 52-week highs, pulled back, and now they're sitting here. And with that in mind, you got companies like Rocket Mortgage that's setting up 97 relative strength. And this certainly should be a beneficiary of refinancing as interest rates come down. And you would really want to spend your time here with Rocket Mortgage, not like a lending tree. Look at the differences. See, this is the AMD of mortgage brokers. You don't want to buy the one that's lagging. You want to buy where the institutions are going. This is where the institutions are going. This is the leader in that group. So you've got plenty of upside here in Rocket Mortgage. A Short Ninja setting up great. They reported the number. And it's just a matter of now of them giving you a little opportunity. See, there hasn't been any opportunity. What you want to see, and this stock was flat today, you want to see action like this. You want to see it go here, 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 and then go. So you want it to come in. And that's why I'm saying if this 10-day will catch up, and it comes into the 10-day, that's going to give you support, and that's going to that should happen, in the next couple of days. So this is the signature that you want: volume explosion, earnings are out of the way, and all-time highs. So this is definitely the active ingredient that you're looking for stocks that can go up much higher than you expect. But now you're just looking for it. I have this little horizontal trend line like right here. So if it'll come back to right here at and stay on, on the breakout period, that would be highly interesting. The ones that don't come in, those are the ones that you should favor because they're hard to buy. Just like I mentioned that ADMA. Like, man, will this thing come in? But, many times you get one opportunity, like one bad day, and it shakes people out. And we're looking, we're expecting and hoping that we have that one bad day and we're buying and we're going to be a buyer. But it's, this isn't a proper setup here. None of these that I've mentioned to you before, they're really, are great, have been great, great setups from a position of the setup. We do on Spotify.
Hey, Roy, can I ask you a question?
Yeah, sure.
Yeah, so it's about two charts. You had mentioned the strength in the home builders. Are you guys also looking at REITs, like growth REITs? A lot of them are still pretty deep in their base, but there's a lot of like relative strength lines, in the 90s, even though they're deep in their base.
Give me a couple of those because this is probably a decent. It's a
Yeah.
decent play, as well as the utilities.
Yeah.
The utilities are probably the same thing, and so that might. I mean, similar. I would just put up this REIT, which was a new IPO. But show me
Torino. It's TRNO. A little bit.
TRN.
Yeah.
I mean, this looks quite. This looks quite healthy. Quite healthy. It's good. These that that pay nice dividends. So you do have some strength there. It's not going to be explosive, of course, but this is quote. I don't want to necessarily say it's a place to hide, but it's a safer. It is a safer environment. So that's TRNO. You got SLG, right?
Yeah. Or another one, growthier one is EPRT.
DP.
No, EPRT.
EPRT.
Yeah.
Obviously,
Obviously,
87. Very similar to a utility company, right? To utility companies' numbers, right?
Yeah.
So, I mean, there could definitely be a place for this. It's, these are more stable, more stable. You've got, there's the XLU, which obviously the utility ETF, which would be, this is acting really good, and
Yeah.
I mean, you do have a few of these like NEE that have, that have a little bit better growth as well in terms of future growth. Like, this NEE is in that distribution, sale of electricity. We know that there's going to be a shortage of power and electricity because of the data centers. So I definitely think you're right. Yeah, I definitely think you're right that some of these REITs or utility companies could be good places to be. Yeah, I'm with you. I agree.
I'm thinking back to like the early 2000s. I mean, we haven't had the tech wreck or anything like that, which is where all that money came from.
Yeah.
Just the setups look really pretty familiar.
You got SLG, that's the big one. This, the CBRE. See, we have this on our list and too, and the CBRE
Yeah.
kind of thing. It's hitting our screens here. See that big, and this is commercial real estate. And this company I think is really big in New York, and that's surprising to me. It's just surprising to me that property management is recovering in the REIT area. It's surprising to me, but it is. And so that's definitely a trend. That's definitely a trend to investigate and to take a look at. Yeah, I agree. I agree with you. Thanks,
you. Roy. Thank you.
Let me see a few more of these, and then I'll turn it over to you. There's Palantir. Okay, this is one of these AI plays, and it got tossed. We actually had to sell. We actually had to exit our position right here because we didn't know where this thing was going, and it broke the 50. We sold it when it came back, and then we didn't want to take it into earnings the next day. But you had a positive reaction to the earnings. It's come back and made a 52-week high, and you can see I have this downtrend line. But we've tried this like 3 times, and every time this thing is broken out, it's failed. You get broken out, failed, broken out, failed, and this is the last earnings period, so we're going to see how this sets up. But Wes is really feel strongly about them increasing their commercial exposure business and the commercial clients and the growth that you're going to see in this stock. You know, Dan Ives is the axe on this. He's got a $50 price target on it. And we thought that, you know, we had high hopes for this. You know, the real move takes place when this stock takes out its old high there at 45 and goes to 90. So, you know, this is one of these stocks that the real move might be on like this time. I recall not trying Tesla like 4 or 5 times before it finally worked. And I was so worn out that I didn't get the big move in 2021, I believe. I can't believe that I missed Tesla, that I didn't play it, you know, 3 or 4 years ago. But that's because I got stopped out, you know, a number of times. And then I just, you know, didn't finally work. Palantir may work this time as well. So, you know, I mean, it doesn't have great, you know, you don't have great volume, great accumulation, but, you know, it is supposed to benefit. They signed a deal with Microsoft, as you know, in the last couple of days that might benefit the company. This Parsons, this is, they do similar, they're a consulting company and, you know, that had a really good reaction to the earnings. They're in high-tech government defense infrastructure. And so that's something that just popped up. So you can see, guys, what we're pointing out is you can see, look at this period. See where it's totally uninvestable. And what I'm pointing out to you is now forget about all the, you know, past, you know, all the past winners, except maybe like NVIDIA, and look at, okay, where's the new merchandise? This is the new merchandise. This is where the institutions are going now. It's not, they weren't going here for 4 or 5 months, and this is the rotation back into this area. So that's what, you know, you want confirmation, and the only confirmation that, you know, the confirmation that I have is that, okay, are institutions buying it? You know, you don't, you know, forget about who's got buy ratings on stocks, and particularly those that are going down, and analysts just double down. It's, where's the stock going next? You know, I hate, you know, where's the puck going? And so this is telling me that something's changed, and now you might be transitioning from a downtrend to an uptrend. And you're not going to, you know, the market's going to have to prove that to you. You're not going to be able to, you know, you're not, you know, you'll want conforming and confirming evidence, and that's price. That's, you know, that will tell you that you're on the right track. You've got a few hospital companies, 98 relative strength, see, that have really, these are really conservatively managed, but you've got a few of these charts that are in fact look great. They're not going to double, but something, you know, can it go up 10 to 15%? Yes.
Roy, can I ask you a question?
Of course.
If you could pull up Monday, MNDY, Monday.com.
Yeah.
My question is, it had a nice breakout, but if you look at the future earnings, I think next quarter, I think it shows, if you can look at the weekly, please.
Yeah. Yep.
I believe you'll have to scroll down on that slider at the left. Yeah, there you go. So the next quarter, it shows a negative earnings. Would you consider a stock like this, where it had great earnings, but then next quarter, it seems to have negative number?
That would make me suspicious. And no, remember, like all the numbers that everyone, and I'm not sure if these numbers are accurate or not. Some of the earnings that have been pointed out, they're not accurate, right? So these earnings come from, I think, FactSet, I think. I think that's that's providing the earnings to Dow Jones. I'm not exactly sure, but that would get my attention. Now this just broke out, and you did have the earning, you did have that signature, but technology in general, it's got me. I mean, it's out of favor. So so I'm not. There's MDB. So Monday's not on our list, and I saw the volume breakout, and it very well could go, but it's got a history of failing too. See, when they reported earnings, it didn't follow through. It failed when they reported earnings. So it's trying again. It broke out, and maybe it works, maybe it doesn't. So hope that provides a little bit of color for you.
Thank you. Yeah, thank you so much. And the only one other curiosity I had was you were showing in your list, there was a stock, HLIT.
Yeah.
I was curious how it made your list, because all the earnings numbers, they're all showing red.
I'm looking at, this is, the highest volume since the base. Right there, that's something. You see the little circle there. That's the highest volume since the base. It's up volume. We're not going to buy this because it's trading $20 million a day, and but the numbers. I was looking at the numbers this year, next year. You are showing healthy growth, but the market cap is like a flea. $1.5 billion. It's a flea. And and the idea that it's come in, I don't necessarily want it to, if it would have stopped, this is the part of the art. If it would have stopped right here and then turned up, I would have felt much better about acquiring the stock, because this is kind of what you would look for. You'd look for the market for it to pull back a couple of days and then turn up. And here it got all the way back into the base, and it was, you round tripped it pretty much in the base. So that's why it doesn't. We'll probably take this out.
Got it. Thank you, sir.
You're welcome. Okay, guys, now I'll turn it over to you guys. The floor is open for any stocks that you guys want to discuss, look at, pontificate about, and hopefully we'll get a few more that work. Oh, let me and I really haven't mentioned this. Now, okay, IBIT, Bitcoin or FBTC, this is, for me, this is my most convicted idea. And we actually at one point we had a 20% position in our trading accounts, then took it down and put it back at 15. But right here, this is when you had the Bitcoin conference in Nashville, and it looked like it was ready to go and then take off, and go to new highs. And this is my most convicted idea. I think this is going to work its way to new high territory and double, in 12 months. So IBIT, Bitcoin, IBIT, FBTC, I think it's got a double in it. But look at the panic and the dumpster. Look what happened to it on the panic. And that was the worldwide panic across all the world indices, and Bitcoin dropped 20% overnight, and we got a 5% position in it, and that we sold down, and from 12 to 15% to 5 right there, and so we missed the we had 5% that we rode down, and it's come all the way back up. You know, from a trading perspective, you could take it off the table, you know, right here until the resistance. But this is our most convicted idea, and we're just going, there's a reversal, but it doesn't get going until it takes out that high. But we firmly believe that you're going to take out the high. The institutional flows, Morgan Stanley just announced all their many investment advisors can buy, Bitcoin ETFs. You're going to have, this is going to be a multi-trillion-dollar asset, we believe. It's got to get to new high territory before it works. It looked like it was going to work right there. And that's when the selling came in, in the market right there, and they sold right into it. Just much like, guys, if you recall, this is when the ETFs just came out and they sold into it. It was a sell on the news. You hear about that, being discounted, sell on the news. So everybody was waiting for Bitcoin to come out. The day it came out, that was the top. Then you had this correction, and it took a little while to build the correction and then, come back. So, back over the 50-day would be, that would be a really good sign. But, it needs to have some kind of base. But that's what you would look for. And I've had a big position in this at various times, from the breakout down here. We pressed it right there, sold into that, and we've traded around this a couple of times. So this isn't a great base, and it just got hammered right there, on the panic down. And this setups, it may come straight up and then come all the way back up and need to handle, but this isn't a great setup, but it needs to get above the 50-day, and then we need some kind of basing action. You had a basing action like here, you had a little basing action here, and we needed to base and then, take that out. But that is, if I had one idea, from 12 months from right now, where I think, something is going to double. And I think this is going to be on the double is going to be on the low side. But for that to happen, it's got to get to new high territory.
I have a question regarding the EBIT. Would you take profits around $40, or would you wait for the breakout?
From a trading perspective, you could sell it right here coming into the 50-day. But I have a big position. I've got a pretty big position in it, and I've got the same kind of question. Like, every time it's come up here, you've got this rally, where you should have sold it. So that's going to be the same kind of decision that a lot of people are going to have. That's a great question, a great observation. But I want to see the action. If it comes up here and just comes in a few days and then go, I don't want to miss it for what the upside is. So. From a trading perspective, you could sell right into this right now, and see if it comes back, and retest. And there's no way of knowing what's going to happen, from right here, from the position that it's in. But clearly that was climactic, and this is going to be the biggest bar that you've seen since FTX collapsed in back on November, I think 10th of 2022. I believe that's
one of the things which I have observed, Bitcoin is highly correlated within the leaders of the Nasdaq, and the leaders of the Nasdaq rotate in every quarter, but Bitcoin goes along with the leaders. So if you are bullish on the Nasdaq, let's say some of them are showing some strength, would you not keep Bitcoin?
Well, the way
Like
I look, it is clearly shown, Bitcoin is clearly shown that it's a risk on, quote, risk on asset. Now, in terms of correlating with the Nasdaq or the S&P 500, we have looked at that information. Sometimes it correlates, and by correlates, it depends on your time horizon. And is it within 15 days, 30 days, over 45 days, less than 90 days, over 90 days, and so forth. So sometimes it's a risk on asset, not necessarily, but it doesn't necessarily correlate with Microsoft or Meta, or it does correlate with quote risk, risk on assets, but it's not necessarily an inflation hedge. And sometimes sometimes gold correlates with the US dollar and inflation, sometimes it doesn't. It just depends on the time frame. So we haven't been able to get any useful information from that to say, okay, put as an inflation hedge, put it on. And now inflation's going down, and we're expecting Bitcoin to go up, which would be contrary as an inflation hedge. But it's sort of like what we mentioned to you before. The market was focusing on lower interest rates. That's fine until then it's focused on a recession, which isn't fine. If we go into a recession. So you've got that dynamic going on there.
Hey, Rob, August
Yeah.
and September, from a seasonality perspective, the worst months for Bitcoin. So my question for you is, let's say Bitcoin takes out the low of August the 5th, which I think was around 50K. What would you do with your final 5 position of your IBD position? Are you considering selling it, or are you just in hand doing?
Let me pull it up. I'll pull it up here in a second and pull this up, and then pull this over. Pull this chart over so we're looking at the same thing. Cryptocurrencies. Okay, so this is actual Bitcoin. Okay, so a couple of things to note. Okay, so this is actual Bitcoin. So we're going back. This is 6 months, and take a look at the chart. And if you take, and we've talked about this before, actually, if you could put a thumb over those 3 bad moves down, it doesn't look that bad. You can see where it's going sideways. It's tried to go, and you had the little shakeout there. It came back ready to go this time. And then you had the sell on the news, and again, the market weakness, the panic. And so I think the way I look at it, as long as you hold above that low right here, I think, and that is actually 58,000. That 58,000, that would be concerning if it takes that 58, which is clearly support. And now it's, I may add to this position above the 50-day, which is 62,000 right there. 50-day, 61,740. And so, it trades 24 hours. So we'll see what happens. So I'm watching it closely. It is above the 10-day. Notice this, and we refer this to as a potential early turn, where the 10-day it's close to turning up above the 21-day. So, that would be consistent with it moving above the 50-day as well. So it's going to be interesting to see if the market goes up, if the NASDAQ goes up from here, I would certainly expect Bitcoin to go up from here. So it's biding its time right here. If the market sells off tomorrow, on the CPI news, you don't want it to close below 58,000. And again, if that follow through day fails, and we undercut it and we have a close below it, Bitcoin more than likely will take this out, and I more than likely will cut my position right there. And so there's a lower boundary, and you've got the upper boundary right here, the 50-day or the 50-day. But right there, I thought it was going to go, and it was on its way to take out 73,000, and then now it's on the way. Now, what might delay, or what might delay and change your whole view would be market confirmation, and where it's breaking down, where the market's breaking down. So, and it just might not be ready, but it's just, it's not a great setup. It's got to get above the 50-day, where if you're not in it, I would definitely, I would add it. That's what I probably would do if I didn't have it. But and I'll consider adding to my position back above the 50-day. The way that we had, the move that we talked about on a few of these things, like the setup, there's Lily back above the 50. There's your, there's sort of the day to buy it. But look at we were looking at this stock right here, and it closed so poorly. They sold right into this on tremendous volume. That's exactly what you don't want to see, where there's distribution and they sell right into it. And so, that's why we didn't buy it like right here. We were watching it. We wanted to buy it, but you had, an epic failure. And then the next day it gapped up and then went above the 50. And, gapped up like 50 points, and then came in a day, and then that's why we added it today. It's back above the 50-day, and we to put the position on. And this is also what I'd like to point out. See where that 10-day now it's going above the 21-day, and so you got that early turn, and it's below the 50-day. I did see a note on the questions earlier about the follow-through days. Most of the successful follow-through days, they do happen below the 50-day. And that's why the trend normally changes after the follow-through day. By trend, you get the 10-day crosses the 21-day, 21-day crosses the 50, and all that. That's a late indicator, but that's a confirming signal that, okay, the trend has definitely changed. But you're getting this potential early turn, like right here. You can see like this early turn. If this 10-day will claw back above the 21-day, that might show up like in the next 2 to 3 days, and it might just if the market could just be flat and it catches up as well, and it doesn't sell off, that'll tell you something. The idea, if we don't sell off tomorrow, that's going to give you a little bit more information as well, so that the subsequent days, that information is going to give you more positive feedback. And what I'm just pointing out to you, I'm pointing you out to where we think you should put your efforts. And clearly, any of these things that I'm talking about, any of these stocks can blow up. Anything can be wrong, but that what I'm saying. But you've got to have some rules to navigate and not panic, and so forth. I mean, we have I don't know, 200 or 300 clients. We only had one person that panicked and sold the bottom and said, "Get me out of 300 clients." And you just don't want to panic. You're not going to always be right, but you have to have a process that's systematic, that works, where you bend and not break and stay in the game. And it would be foolish to compound your efforts and never sell and just let your account deteriorate. On the other hand, it's a rookie mistake to also panic. And so there's that fine balance between knowing what you're seeing and knowing what to do, and just keeping wits about you. And again, we hear this term mindset. And I was watching a video from a football player, Joe Burrow. That's who I'm a fan of because he went to LSU, and he was talking about the mindset. And the mindset, and they talk about taking reps, and what we're talking about tonight. We're really talking about taking reps. Okay, these are reps that you're looking at, and the more that you see this, the better that you'll do. And you'll be able to more effectively navigate through these environments. But it is, I mean, believe me, what we went through was something that doesn't happen every day. And this could have turned into in the market, this could have turned into the 87 crash or 29 crash. I mean, it was just obviously based on that VIX. And again, if this market turns into if we get into a serious recession, which is hard for us to believe, because the GDP now forecast for GDP, I think it's like 2%, and you don't have recessions when GDP is increasing, 2%. And the old way that we used to determine if we're in a recession would be if we had 2 consecutive drops in GDP, and you won't know that till after the fact. But that SOM rule that Wes pulled up, that's telling you that normally recessions occur when you get that uptick in unemployment by 0.5%, and that triggered. So that's telling you, we're definitely and the Fed is on recession watch as well. But if we don't go into a recession and the GDP is fine, and and we still get growth, then this will have been like a golden opportunity. But we don't know what's going to happen. We don't know what's going to happen with the economy, in the next, few weeks. And, and it could happen, and it can happen quickly. And that's why the Fed is got a difficult job, because, they don't want to wait too late, where you can't reverse the economic weakness till you get to a situation where it's too late, and and then the economy gets weaker and weaker, just as it unfolds.
Roy,
What
any
are your
thoughts on
views?
IBM?
Yeah. Man, it looks great. I mean, it's the numbers aren't terrific, but the stock sure is holding well. And we actually talked about this last meeting. I mean, this is, you have this nice cup and handle breaking above 196. That's, this stock's a buy. I mean, this is a perfect cup and handle. And maybe, again, maybe this stock is showing you that they're reinventing themselves the way finally Microsoft did. And I mean, it's certainly, certainly it's in pole position. So the time to buy it, and and I was talking about this early turn. See here, when you go back and you look, if you can look at this on your chart, right in here. See, that's where the 10-day crossed the 21-day. It was below the 50-day. And you had, of course, you had this declining 50-day, which isn't great. And normally, when you move higher into a declining 50-day, it's sold into where it was sold into right there. And then finally, it built a little base, firmed up. But there's that early turn that I mentioned on a couple of these stocks. So you had your early turn, looks like a great cup, and this is the handle, and then that 196.20 looks actionable for sure.
Hey Roy,
what are your
I
views
have
on the electrical component within the utilities like CLS, VRT? They were very strong up till last month.
So, VRT was one of our this was one of our biggest winners. And, but this is.
You still own it?
No, don't. I mean, we're not going to ride something from 109 to 60.
No.
I did. You can too.
No, we're gonna, I can't tell you I can't remember where we more than likely we first got into it like here on this big spike in volume, and then again this was like it was under the radar, and then they started putting some good numbers. But look at what's happened like in the last a quarter. Earnings are down, 52, 56 to 43 to 67. And so I don't know. And I don't know. It's poor relative strength below all the averages. It's, we're totally out of it and not interested. ANET's the same way. I mean, this is just untradeable. And, the numbers on this ANET, these numbers aren't that impressive for being the end all and do all for liquid cooling systems and servers and data centers. This isn't acting great. And, look how this thing, there's no accumulation, but this is the point that I'm making. So this is not healthy. When you look at this wedge up, I want something that looks like IBM. I don't want something that looks like this. And then so volume declining while the stock rallied, and that's no buying. That's just institutions not selling. And the numbers, I mean, these numbers are $1.99 to 210, 208 to 199 to 210. That's not impressive. Now the numbers were impressive. Let me see. Yeah, see, look at this. See, look at the numbers here through, right here. And, look at the numbers. Look at these quarters. Earnings are expected to go down 13.07. So this is not what you want to. This is not where you want to be. Look at revenues coming down, earnings coming down. Now you don't know if Wall Street's missing the numbers and they've got to, and they're going to have to raise their numbers significantly. But that's not the profile that I would want. It's just like who mentioned the one that I said that made me suspicious when they had the 2 quarters coming that are negative. What was that stock?
Monday.
Yes, Monday. So, I mean, the thing about this business and what we do is you have thousands of reps, you have thousands of stocks to look at, and it pays to narrow it down. And what we, hopefully are doing for you guys is narrowing, that process down. And by no means is it all inclusive, but this is, this is a workable list that, if I had somebody that has been doing this a long period of time, laying this out for me, like, okay, this is really what you should be looking at, like right now, that would be invaluable. If I had that, 30 years ago. And so, hopefully we're providing with you. Look, there's going to probably be 10 of these stocks on this list that are up 100% or more, in the next, 6 to 9 months. This ADMA, this is a $30 stock. There's going to be a number of these. There's going to be 25% of these. There'll be 12 to 15 of these that go up 100% or more. And then you can have half of these are going to go up 50%, and you're going to have a quarter of them that don't work. So, it's like that batting analogy or that tennis analogy that Wes gave. You can be right at half of these if you happen to stumble upon, half of these that, that work over subsequent weeks and months. So this is, man, I'm excited about laying this out like this because this is, we can make money here. I mean, big money. And again, it doesn't mean that you can, that you're going to, be always right. But, if you build some profits up and then you can take a swing, then at least you took the swing. And, we took the swing here because we were up, 15 to 25% in all the accounts. And, we're up over 20% just about, and every 20 to 30%. And depending on the account, and then just got hosed. But, we took the shot right there to potentially, have a 40 to 50% year across the board. Now, the way I would approach it, and, we don't know anyone that didn't get hurt in, this market meltdown, but now you just start one stock at a time. So, you don't, like all these stocks, you don't come in tomorrow and put, these are my 10 favorite names and put 10% of my 10 favorite names. I mean, it literally should be one stock at a time.
Roy, could I run something by you?
Yeah.
I also want to say thank you to you and Wes for doing these meetings. I think they're wonderful.
You're welcome.
The ticker is CM as in Mary, P as in Peter, O, and they do financial payment arrangements for crypto. And they had a highest volume candle ever the other day. And when the crypto stuff was just tanking, thing was absolutely taking off. It's a little thin. It may be a little thin for you guys, but I think it's got a lot of institutional ownership. My average trade price, I am in this, my average trade price is $8.61. I got half a position before they came out with earnings and the remainder of the position on the gap up. And I am obviously concerned about how extended it is. I've taken about 30% off, but I do think this has a lot of potential. I'm not even a big crypto fan, but I wanted your opinion.
I'm writing it down. This is definitely something, the type of stock that we would not be in, and that CORZ, it's very similar. But with that in mind, so the negatives are this. The negatives, it's in a lousy group. 151 out of 197. The institutional ownership, it doesn't have very much. No A plus funds in it. It's only got 117 mutual funds in it. And it's very thin, only trades $5 million a day. And we look for something that trades at least 100 million. And so those are basically the negatives. Now, the positives are this thing has terrific action the last 4 days. Is it Rachel?
Yes.
Yeah. I mean, the action the last 4 days is exemplary. It's fantastic. Look at the volume. Look at the price action. Man, this thing, I mean, something like this in the float, see the shares outstanding, only $81 million. And what's the float? 11 million. See, that's what's going on here. And it's all this was a SPAC. That's not, great. A few of these SPACs work, but, it's come all the way back. And with this float, this could, with this float, this could be $100 stock, like in a week. If Reddit and those guys would get on something like this, and I don't know what the news was, right? Well, it was earnings. Look,
it was earnings, yeah.
So this is like under the radar. Nobody's smart enough except you, Rachel, that's uncovered this. And this could, and I've seen a few of these like this. I mean, something like this, it could be a game changer. It could be a life changer. So, I mentioned the negatives, all this stuff, there's the negative, but the price action on here is terrific. And I can't tell you, what I would do with something like this. I mean, you mentioned, but what I like is you are talking about an exit strategy, which is great. And when I've had a few situations like this, it's hard to get enough. When I've talked about a life change, it's hard to get enough money into it to really change your life, but it's got great action here. It's thin. We'll just see what happens, but thank you for the update. And I will never buy it because it's not liquid enough. But again, this is the kind of thing where you could it's where you could get it. Could be like an HIMS. See, when it broke out on volume like here. And you just have to watch it. See, you got, 10 to 17. And then it had this big correction, 17 to 11. And then you had the volume. That's when they announced that they were, when HIMS was going to clone the compounds that Ozempic and Lilly were formulating. And then you had that move as well. So, take that for however you can use it. Congratulations on the trade so far. I thought this CORZ, which was, they're in the blockchain hosting and so forth. I thought this had the potential to be a big winner too. But, it's very similar to what you're talking about, Rachel. But, this trades, 20 million shares a day. Versus, the other one that you mentioned, very thin, CMPO. But you need some kind of explosive volume to really get it going for Wall Street to embrace it. But it's certainly the great action, great action right here. Great action. It could be big. It could be a big winner.
Thank you. Thank you so much.
You're welcome.
Parker Hannafin.
Really nice action. The industrial, in the industrial sector, this has sort of been a little bit hit and miss. But what I like is, And again, and to reiterate, this is what if you stick, this is what you're looking for. So you want, focus your, ideas just like this, like Parker Hannifin went up on the number. It's near a 52-week high. You got, look at the mutual funds. This is fund ownership, thousands of mutual funds. You got Fidelity Contra Fund, one of my favorite A+ IBD mutual funds in there. Looks terrific. The number is, blue chip, stable, and it doesn't have the explosive numbers that a technology stock has, but they're making really serious money. Looks good.
Thank you.
Good job on that.
Roy,
Can you take a look the MISI Motorola solution?
Okay. Looks fantastic. What would you, it's again, this is, we're so, just in general, certainly many, people that employ CanSlam, you're looking for normally explosive numbers give you explosive price appreciation. But man, isn't there a lot to be said about, look at that. Look at the uptrend. Let me look at it weekly. This is what, look at that. That looks like ISRG, long term. Look at that long term. By the way, Motorola was the first stock that I bought in 1987 when they came out with the Razor. That was the first stock I ever bought.
You still have it?
I wish I should have framed it and put it on my wall or put it in a case or something. No, I don't have it. It was relegated to the trash can, but I did have it, first when they first came out.
How about what will be the entry point for this one?
Tough. I have no idea. It's too hard. I don't know. There's no pivot. It's just, clearly it's pulled back, something like this. And I just said that sort of like cavalierly. I don't know, but it's pulled back to the 50-day a number of times. That 50-day seems to be on the pullback. That seems to be every time it pulls back like 10% to the 50-day, it's been a buying opportunity. But it has moved, from 270 to over 400. It wouldn't be surprising. A lot of times these big winners like this, they go sideways for a few months, and you get bored with it, and it comes in. It's not, it's not doing anything, and then it makes a higher high. Not doing anything, makes a higher high. Not doing anything makes a higher high. So that's
resilience, right? Look at it. When everything tanked last week, this guy didn't even budge.
That's very
resilient.
That's superb. That's superb.
Like nothing.
It's in a strong group. This telecom area. Like HLIT and that F5. This is in that group, and it's a nice, strong group. It's blue chip stock, nothing to like. Everything to like, nothing to not like here.
Really nice.
Thank you for that idea.
And then I have another one, FICO, FICO.
looks great. FICO, and I was looking at Moody's too, which that's a Minervini pick, Moody's, but this thing looks great. And now it's extended, and look at where it came in to the 21 day. It's interesting. See, this stock was holding up so strongly, and this didn't trade like Palantir or Bitcoin on the look. There's the crash, and this thing didn't even break the 21 day on a closing basis. I mean, this is a really strong blue chip, idea, and maybe business, in the rating services and so forth like that, as as our belts tighten and business improves for these guys as the economy weakens and you have more and more FICO scores and all that kind of stuff. Very strong. I mean, that action's telling you something, but it definitely it's hit our screens. 97 relative strength, new high. Nice. Look at that nice uptrend. See, I've been following it for some time. See where it broke that. It went sideways for 2 years. See, look at that. See, 2 years, and then it finally broke out right there. And that was 500, so you got a double out of it. See, there's going to be some of these stocks that we're profiling down below. They're going to do what FICO did. And that's why, spend your time on the stocks just like this. Like right now, what's hitting the 52-week high list? What are making 52-week highs? And more importantly, what's hitting all-time highs? And there's your, green line breakout there on FICO, a couple of years ago. And it was under the radar. I mean, while we're all watching, we're all following, NVIDIA, FICO, has had a major move. So blue chip stock looks great, nothing wrong. And I was mentioning that, see, this ISRG is very interesting here. They're of course famous for their Da Vinci system, and this stock's going sideways for a couple of years, and they just launched a newer, better, more improved Da Vinci system that they're going to roll out all across the nation over the next year, and so you're going this should benefit, their earnings should benefit immensely. And see, look, this didn't only look how this just came in barely, and now it's making a 52-week high and an all-time high, like right here after the debacle. So like this is like you got a new product. There's been no selling. It came in 2 days in the panic, came all the way back, and this is like this looks great. And it's, and this is this is Bible right here too, taking out, see that 466? It's a $400 stock that just took it out by $2. I mean, this thing looks amazing. And, again, as you look at, your time frames, look at the weekly, look at the monthlies, and, look at that just, it's just, again, we might be like right here or right here. See where you had this big correction for a number of years, and then it comes back on, I can't remember back in 2016 what happened, but then it, made new highs. So again, I mentioned the fundamental changes. It's breaking out right here. We could be on the beginning of having like a 2-year run, and it went from 80 to 250. You're up again, 200%. we could be right on the cusp of a move like this, right on the cusp of this being this should be $1,000 stock. This would be one of those that, man, they're just launching the new Da Vinci's, and the Da Vinci's, I forget how many units they've sold, but there are thousands of these, and they're going to replace them. So it's a refresh cycle, just like the Apple iPhone. So they just got the approval, the FDA approval for the new device, of course, and it's setting up and not giving much back. This is the kind of stock that you want. It's got liquidity. Look at trading, $1 billion a day, and relative strength line new highs. And this has look at the institutions that own this. See, this is top quality merchandise right here.
And it's way stronger than the competitor Striker.
Oh yeah. Yep. SYK. I'm not even familiar with Striker. Maybe Lily or somebody else has a product too, but I'll take your word for it that the stocks, the performance there is telling me that it's the leader, right? This looks great. This looks terrific. The idea. So, if this market gets hit, you're not going to take out this low. Now, a lot of these other stocks that that we've looked at,
Carolina's violent crime rate is higher than the national rate.
Attorney General Josh Stein.
They could, a pullback. This could come into 450, to the 21-day. But I don't, but it's got there was big support right there on the panic. 2 days of panic. That's telling you. Look, that's telling you all these guys, all these institutions were buying on the panic. I don't know if they were necessarily buying. You had selling pressure, but it didn't last for long. 2 days of selling pressure and then back to 52-week highs. This is exactly what you want to see. And don't again look for this move here. And this is why I'm saying when I look at I say this that a number of these stocks have the ability to double in a year, and this is what they do. It's not going to happen overnight, but us in a sustainable uptrend, this is going to probably be $1,000 stock this time next year. You got the right institutions, thousands of them. The action's good. You got the new product, blue chip numbers. And let me look and see what those weekly numbers, sort of flat here. And then they start accelerating. And so, again, they're launching this next year. Maybe you get the acceleration begins like right here. And the market's discount. The market knows that they're getting ahead of the units that are being launched. So with that, let's move to the next one. And let me see. We'll give it about another 10 minutes. So anything you want to discuss, let's sort of rapid fire, and we'll take a look. But
IoT, Samsara, IoT.
Okay. I've tried this a number of times. I have no idea why this stock is. I have no idea why this is a $22 billion market cap. And I've certainly been to the site there, samsara.com, to look at their product offerings. I've tried it a couple of times. Look at the breakout there. The breakout there that failed. I think we bought it we bought it here. We bought it here, and got kicked out in the sell-off. $22 billion market cap. But look at the numbers, see, 2, 3, 6, 9. They're only doing like $1.2 billion in revenues, but everybody's in it. So everybody's in it. So defer to, okay, what's Fidelity doing? It's what's T. Rowe Price doing? Harper, Columbia. These guys are raising their, they've got positions. They're, you're going to have more of these funds. And for whatever reason, it's sitting here knocking on the door within a 52-week high. Wes and I talked about this, about like, man, you should be buying this today. And we discussed this today, but we have been burned on it. So if you haven't been burned on it, you should definitely, it's on our list, but we probably won't act on it. But, you've got institutions that really like it, and, it was actionable today. And man, it's right here. Man, it's right. Look at the all-time high breakout right here. It just happened. So this could be one of those. This should be a stock that doubles. And look how this stock came all the way back. And again, I mentioned to you this. See, when these stocks, the IPOs that come in and get clobbered and they come all the way back, and they make new highs, the move wasn't on from 20 to 33. The real move is on from 33 to 66 to 100. So it's got great positioning. Look how volatile it is, but it's gone through this turbulent zone, and definitely something's going on. Institutional favorite definitely should be on a watch or buy list, but it's pretty. It did get clobbered, but it's come in the panic, but it has come back too. So definitely a stock to watch, buy, be interested in. And, there it is on our list right there.
I have one that's probably familiar to you. Looks good right now. Taser, Axon, AXON.
Oh, yeah. We would, if we get like a little pullback, and then, little pullback is showing down $1.48 over, right now overnight. But, if this thing comes in and then turns up, that's, it's pristine action. And, you should have support from here. We're, again, they're, great company that's very sticky. That's got the dash cams, that's got the cameras, and they've got obviously the tasers. But it's really it's a security company, and all this data is stored in the cloud. And again, I think I mentioned to you before at last meeting that I think this is the biggest client of either Azure or AWS. I don't know if they're
AWS.
Okay, so they're with Amazon.
Yeah, they're
Okay.
Amazon. Actually, it's interesting.
It's
interesting that you say that it needs to come down a little bit, because I was studying this chart over the weekend, and what I noticed, the last 6 years, late summer earnings, when it pops, in next 4 weeks, it gives up half of its gain.
Like in the summers, it's
pop. Every September earning, when it pops, there's one or two exceptions, but if you read the news, there's a reason for those exceptions. Every September when the earning comes out, if you go on a weekly, it's a little bit better.
Okay.
Right after September earnings, in late September, early October, by mid to late October, it gives up half of its gain.
Yeah, right there I see like September, like it's turning up to pop. This September,
Yep, you can go back. I mean, if you blow up the chart, you don't have to do it now, but it was a bit of an observation. I have no logic here. I'm just trying to share my observation.
Also getting into drones now too.
Oh, they are? Yeah. Oh, really?
Yep.
Well, that is an interesting new product that seems to fit, that fits with what they do, or their major product area. Thanks for that. That's a really insightful observation. Yeah.
If anybody's interested, maybe they can do a study when they get chance, right? And we can talk about it next time. But that was one very unique observation that I noticed in this particular stock.
Well, that's a great point. Look at this volume. Look at the biggest volume in the last year, like, last week. And again, that's the launch, to me, that's the launch phase. So it's quite we're looking at buying it, but it's not, this setup's not great, but if it'll come in, if it come in a couple of days and then turn up, we'll buy it.
Mm-hmm.
So based on again the characteristic that we talked about before, volume, price, and so
I have alerts roughly the same price. I think I have alerts set at I think at 353 or something like that.
Yeah, I didn't get that last comment.
Yeah, I have alerts set at 353 something, 350, 350 or something like that. So if it takes back to that, could possibly. Again, I know nothing about this. I'm just strictly sharing my observation.
Just to give you and just to point out, what am I seeing on a different chart? And a lot of times, see, this is the 10-day. These stocks come into the 5-day. Let's take a look at where that breakout, and look how glaring. See, the volume is right here. Look at this volume on this chart. Now this gives you a different perspective. This is terrific, tremendous buying pressure. So a lot of times these only come into the 5-day. So there's the 10-day, which is 341. Now that's going to be, of course, moving up. And that's going to be, probably, this 350 area. But let's look at the 5-day just to see what that looks like, because that's the best case scenario. See right here. See,
the 5 days slightly higher. Got it.
Pardon me?
Yeah, 5 days is a little bit higher, around 357. Yeah.
Yeah, 357. So at 357, which is down $10 from now, that's where it should find support. Right there at the 5-day. So what I would like to see, the setup, there's no setup here, but if it'll come into the 5-day, you could, buy a little bit at the 5-day, and then if it'll turn up right there, turn back up, and you get a pullback buy, then you can, then you put the rest of your position on. So, I mean, that's how we're going to handle it. We're going to buy if this thing will hit the 5-day tomorrow, we're going to buy 2.5% to 5% in this position. I'm talking about the next 2 to 3 days. If it comes in and turns back up, and then we'll put the position on, and then you'll be able to put your stop in right below where it hit the 5-day and then turn back up.
It's just a curiosity question. Why 5 days?
It's just a lot of these stocks that break out, that the strongest stocks only come back, when they initially break out, they only come in to the 5-day.
That's from your observation and experience, I'm assuming.
Yeah. So this is this is when Meta just broke out. See where it really tracked around this 5-day. Green line, and then it, of course, it rode over there. But when they first come in, they come in to the 5-day. That's where the people that are early, that see it early, that that's where they'll launch their attack, and they'll buy it right there at the 5-day.
Right? Does this require an explosive move like the 10%? Up and a 300% volume?
Yeah. Yes.
Cool, thank you.
Guys, 10 o'clock. I'm going to call it a night. Listen, we want to thank you for attending. Hope that that we gave you some great information. It's challenging, it's tough. Don't give up. We're not giving up. We've been, I've been doing this 37 years and survived and gone through all these market meltdowns, bear markets, uptrends. Congratulations making it through this. Keep your mindset fresh. Think about the mental reps. Hopefully we pointed you in the right direction with the number of stocks to look at. That's why we're here. Thank you for sharing your ideas with us. We're always looking for great input from you guys, and you certainly are giving it to us today. And again, I just wanted to thank you. Thank you for attending, and we'll see you next month. You should be on our email list if you're on the call. If you're not, you can email us to get on the list, and we typically send out the recording the next day. The recording will come out tomorrow, the next day, and you'll be able to study all these charts that Wes put together for us. We think they're highly useful, and keep your spirits up. Innovation always works. We look for innovation in business, and all the great companies will continue to perform despite what happens politically. And we're going to be right here to help you identify them as well. So thanks, guys, and hope you had a great night. And we'll see you next month.
Thanks,
Thank you,
Roy.
always,
Can't wait for next month.
always educational and always entertaining and beneficial. Thank you so much.
You're welcome, guys.
That was wonderful. Thank you. You have a good night.
Thank you, guys. Appreciate it.
Okay, thank you again. Bye.
You're welcome.
Bye, Roy. Have a good night.
Likewise.